Hello.
Hello.
Hello. Are you all right?
I'm all right, thank you.
Good. May I know your name, please?
I'm Eve.
Oh, Eve. Okay, that's fine. I'm Dr. Elvis. I'm taking the healthcare course, and we're going to look at managing finance in the public sector.
Yeah.
Yeah. Apparently, you missed the first lecture, so I'll have time probably next time to have a quick recap on what we did. But today, what we're going to do is to carry on to the learning outcome to LO2.
Okay.
All right. So basically, we are trying to look at why accounting is essential for decision making. In fact, accounting per se is not made for the sake of making, but it's made just for decision making. So we're going to go into that. And then we'll look at management accounting information actually for decision making, because we've got management accounting and financial accounting. And because this is healthcare course and not ACCA or any other finance course, we wouldn't be dealing with calculations. It's just a bit of trying to expose you to how you'll be able to understand financial statements such as bank balance sheet and cash flow, just to be able to understand and analyze them. That's all. We're not going to go into detailed calculations and how to. Yeah, so that shouldn't be a problem at all. So we'll try and also identify users of accounting information, and then a type of financial information that we need in order to make decisions. Because as health and social care professionals, or if you're a leader, all that you have is to be able to understand, because you've got your accountant there. He's going to prepare everything for you, so you don't need to prepare. But at least you should be able to understand what goes on. That's all that we're looking for. And we're going to look how financial information are used for monitoring and decision making as well. Sorry, Raman, I'm in the conference, so you can call me later, please. Right. Yes. Right.
Hello.
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 All
yeah.
Right, so you can,
Just a quick disturbance, so don't worry. We're going to carry on.
Okay.
Right. So we're trying to look at how we can use monitoring and decision making. Sorry, Mr. Rahman called me, and so I have to take a quick call, but don't worry, let's go. So we're trying to look at why accounting is essential for decision making. In the first instance, identify management accounting information for decision making, identify users of accounting information, the type of financial information that we need for decision making, and how they are used for monitoring and decision making. Because this is healthcare, probably the next lecture, I will transpose financial information from maybe NHS, Manchester, NHS, Foundation Trust, Liverpool, somewhere like that, so that we can transpose it, and we'll try and see how best we'll be able to understand and analyze that. Is that all right?
Yeah, that's right.
Yeah. Good. So today is going to just be theory, until we get to a point where we'll be able to look at actual financial information from the NHS. Good. Thank you. Right. We'll look at different types of financial decisions to be made, and we'll be able to demonstrate any technique that we'll use to support our decision making. Of course, I'll try and I'll let you a few things like few financial ratios that you can calculate and use, but then it will all be calculated for you. You wouldn't do the calculation. I will do, and I'll show you how it's interpreted. That is all. Okay. So why accounting is essential for decision makers and managers? That's a big question. Right. If we are not able to put down financial information, then of course we wouldn't be able to make any decision, and we can plan, and we can put in any internal controls. So planning is going to help us to describe how the organization will achieve its objectives. And then the control aspect is the process of implementing plans and evaluation if objectives are achieved. So we have the planning aspect and the control aspect. In fact, even though most of us, even the layman is not an accountant, they have their own means of gathering information on whatever business they are doing. If you go to any corner shop in England, the person there might not be an accountant, but then at least he or she understands basic income that comes in, the basic expenditures that goes out, and then based upon that, the person can plan how best.
Dr.
Yeah.
Yes. Apparently, can you accept Christina on the session as well?
Christina, okay. Is he trying to get on?
I think so, yes.
Oh, okay, just a minute. Let's try and allow Christina to join us. Yeah, I think she's in now.
Okay.
Lovely. That's fine. So, as I was saying, we are not accountants. We are just healthcare managers. And all that we need is to be able to understand basic financial information that will enable us to plan very well. And then in the control aspect will be the process of implementing our plans and evaluating our objectives. So these are key things that we need to understand. That is, so the question of why accounting is essential for decision makers and managers. So maybe our role might be managers in the healthcare sector. So if the accountant comes in with a lot of information, how do we analyze that? Do we understand that? Can we together as a team plan and see where we are going? Okay. Let's look at users of accounting information. In the first place, we have management accountants and financial accountants. Right. Now, if you look at the management accountant, all that they do is identifying, measuring, accumulating, analyzing, preparing, interpreting, and communicating information used by managers. So we've got the managers there. So they need all the information that will help us as healthcare professionals, as managers, to be able to decide the next line of action. However, if you look at the financial accountant, he or she develops information for external decision making. Stockholders, suppliers, bank, government authorities, tax officials, they deal with that. So they will prepare all your information and then make sure that you meet government obligations and to be able to provide information for all shareholders, stakeholders, all of them. But then the management accounting side is to give us enough information basically for internal use so that we, the managers, will be able to understand, and then based upon that, we can decide as to the next line of action in terms of the organization, whether we are making profit, whether we are losing, and how we'll be able to rectify that. So just have a brief distinction between the financial accounting and management accounting, so that when it comes to a point where we pick any data from any NHS Foundation Trust in the UK, then we'll be able to know whether we are going for management accounting information or financial accounting information. So briefly, so basically, we will be using NHS data for the purpose of this study. Right. Again, I've tried to come out with accounting role of assisting decision makers, which is through measuring, processing, communicating information, which is usually divided into two categories, which I'm going to show: management accounting, financial accounting, which I've already explained. And then the two may be distinguished by the principal users of their information. So I told you one is what? For managers who are internal, and the rest is for external, for the taxman and any other bodies that are quite interested. Okay.
Dr. Elvis, I can't see the presentation on the screen.
Oh, I was sharing, so if you can't see that, let me go back and click on the sharing.
Thank you.
Okay.
Yes, I can see now.
You can see now.
Oh, it's gone off again.
Let's go off again. Are you okay now?
Yes, back.
Lovely. And then take it from there. Still with me? Are you still sharing?
Hello?
Yeah,
Okay. If you can still see, that's fine. Good. If anybody has got any problem, please just let me know. Yeah?
Okay.
Okay, that's fine. That's fine. That's fine. Good. So let's carry on from there. So the management accounting is basically geared towards internal decision making in terms of profitability, in terms of laws, how to carry the organization forward. This is all, and it provides managers and employees with the information regarding how they have done in the past and what they can expect in the future. That is management accounting. The share accounting side, as I said, is geared towards external decision makers. Right? If a bank wants to deal with an organization, they would like to look at your financial standing and then decide. Maybe if they want to give you a loan, they will look at your financial standing. So that provides information in the form of financial statements to evaluate how well the business has achieved its goals. Right? And every sound bank manager will try and look at your financial report and then decide as to what to do. Financial statement report directly on the goals of profitability and liquidity. How profitable and how liquidity in terms of cash, liquid cash, not having cash in assets or any other thing, but liquid money. Also, they are also used extensively both inside and outside the business to evaluate the business success. So you can actually evaluate the success of M&S as against Tesco based upon their financial information, which is most often in the public domain, right? So that's why we'll be able to assess the financial statement of the Foundation Trust in the UK and then use them. All right. So we have the information being used to evaluate organizational performance as well as assess possible course of action. And we can also compare actual results to the expected. Right. So this is more or less. And then it can also be used for planning and control. Accounting information helps managers plan and control the organizational operations. So the planning will help us set our objectives and outline how the objectives will be obtained. And control will be implementing plans and using feedback to evaluate the attainment of our objectives. Do you have any question that you can ask me now before we proceed?
No.
No, okay. Okay, that's fine. Let's go ahead. How many of you have got some accounting background? Any of you?
No, not me.
Not you. Who else is on? Who else?
I don't.
You don't. Right.
No.
those who join later on, as I said, there's no fears at all. We're not going to prepare profit and loss accounts or balance sheet or whatever. No. We'll have already made financial statement and we'll try to understand. That's all the role that managers in healthcare need to. You don't need to go anything further. After all, you've got your own accountant to do anything for you. When auditors come in, they will audit and they will give you the audit report. And all that you need to know is to be able to understand what the report means. That's all. So we are trying to explain what is a management report and a financial report and how they are used for planning and control. Right. So that's what I've already explained in table form. It's not quite clear, but you could see under management process, we have the planning and control, and then we have the internal accounting system where budgeting thing comes in there, and the source documents that we need, such as the invoices, and all those things come in there. And then we have performance report. We'll not go deep into that. Let's look at the next slide. All right. We also need the information for budget and for performance report. And the budget is simply a quantitative expression of a plan of action. Whatever plan that we intend following, we just put them in figures for you to see, right? And of course, we all do our personal budget informally, because once we have our wages and we want to go to ATHE to go and make shopping, we list the items that we're going to buy, and then we know the money that we have in hand, and we plan how best we'll be able to meet our needs with the limited amount of money that we have. So a budget is basically a quantitative expression of a plan of action, right? And the budget, you can also compare your actual with the budgeted amount, and then sometimes there might be differences, and that will be a variance that we might have from our plans. So brief. So this is a sample report, performance report, with the actual budget. We have our budget, how much we budgeted, 50,000 sales. Our actual was 0, therefore our variance is 0. I'm not going to go much into figures. So our sales minus less sales, all the things that we use over there, we have total expenses, and then we take it from that, and you have your operating income, right? I don't want to go detail into that, just to give you an overview of how a budget look like. We'll take an NHS budget for you to understand as we go ahead. As I said, don't mind the figures at all. What is the position of the accounting in the organization? And what is the management accountant's role as an accountant? Sometimes people don't seem to get the difference between the management accountant and financial accountant. So the management accountant's role is to collect and compile information, interpret and analyze information, prepare standard report, and is involved in decision making. So in as much as you need to understand, you have somebody, a team that will help you sit down together, compile everything for you. All that you need as the manager is to sit with them and understand the figures that they are bringing before you. That's all that you need to do. You don't have to do it. The management accountant will collect everything, compile all the information, and they interpret and analyze the information for you. But it's better for you to understand what is being done. So for instance, one of the reports that you are likely to face is a balance sheet. And as I said, we are not going into details, but with every balance sheet, you're going to have our assets and our liabilities, right? And assets are in the form of cash and physical. If you take an organization, it's a factory, you've got a factory building, it's an asset. You've got cash, it's also an asset. So we've got a fixed asset and then liquid assets in the form of cash. Liabilities are what goes against us, what we owe, our liabilities, right? And then equity, stuff that let's go to the top again. Assets are probable future economic benefits obtained or controlled by a particular entity as a result of past transactions or events. Because we'll be operating for a long time, we begin to acquire and increase our assets. And then when you come to liability, probable future sacrifices of economic benefits arising from present obligation of a particular entity to transfer assets or provide services to other entities in the future as a result of past transaction or events. And equity is residual interest in the net asset of an entity that remains after deducting its liabilities. So the assets but not liabilities will going to give you the equity. Is that clear to everybody? These are key terms that we need to understand, right? So assets minus liabilities will give you equity. And basic accounting textbooks, we have assets minus liabilities equals to capital. So it means the equity is another way of saying capital, right? And then with income statements, we always have the revenue part of it, then the expenses part of it, and the difference will either be a profit or loss. So for income statement, you are likely to have revenues on one side, which is inflow of money coming in, and then the expenses that is incurred, which is outflow, and the difference will be our profit or gain. So if it's an NHS, revenues that are coming in will be money that is voted by the government to the foundation trust. And then the expenses are a payment for doctors and equipment and all that, right? So we are bound to have either a deficit or surplus in that aspect because you are not trading for profit, so you can't say it's profit, right? And we have one of the things that you come across is also statement of cash flows. Statement of cash flows. So you might see a cash flow statement, right? So we have operating cash flows, which is the breadwinner of the firm, cash flow consequences of revenue producing activities of the firm. So anything that, if you is a manufacturing, or that you are producing, those production is going to bring you income, that is the cash flow, right? And then investing the cash flows, this is a decision to maintain the firm's operating in the longer term. So the cash is being invested. And then we have financial cash flows, which is in theory, there should be a residual category. Whatever cash is left should either go to the retired debt or return to the stockholders. Whichever money is lacking should be raised from debt issuance or requested from the holders. So you have the operating cash flows and then the investing cash flows, and then whatever is left is going to residual, right? So you look at the difference between the inflow and then the investment from the flow that are coming in. Any surplus will go to residual. Whatever is left is either go to a retired debt or return to stakeholders. If there are shareholders or stakeholders, to go back to them, right? These are key terms I just want you to understand. So we're going to have the bank statement, balance sheet is one thing. We have statement of stockholders equity. You come across it. when we take any of the financial statement from any of the NHS, we'll go over it for you to be able to understand. So I'm just exposing you today to key terms and the key statements that will come across as we move on from the theory state to collect actual statement, and then first we'll be able to analyze. If you have any question, please now in the healthcare sector. And all the example that we will give in our assignment, because it's managing finance in the healthcare sector, we will be using financial statement from the NHS Trust. Is anybody working in the NHS? Anybody?
No, not me, no.
Okay. So basically, this is an introductory aspect of things that are yet to come in our third lecture. In the first lecture, for the benefit of those of you who are not there, let me give you a quick recap. First point, the minute. Right. We looked at lecture 1. Those of you who were not on and who have not gone through that, let me brief. Analyze ability for public sector. The AI learning outcome. And for health, we covered. We try to understand public sector, analyze the difference within the public sector managers, analyze financial information reported. So what the private sector stands for and what the public sector stands for. Of course, we are not going to deal with private sector because the NHS is public sector. They are owned by the government, they are controlled by the government, their funding is coming from taxation, and they are accountable to the public and the government as well. So example of government agencies that are listed are NHS trials, police, local authorities, Quangos, which are partly owned government, partly owned by private. And then in the international public sector are listed the World Bank as one, is also a public sector. The private sector one, you can see them clearly. Virgin Atlantic, Thames Water, Matland, B&M, they are all with that. Go through quickly. So a public sector in general terms consists of government and all publicly controlled or publicly funded agencies or enterprises and other entities that deliver public programs, goods, or services. So it's either they are delivering programs, goods, or services. So the NHS falls under services. Right. Let me quickly move. Talk about public corporations and statutory corporations, a public corporation, government company, a brief history of the NHS, which is quite important for us, because in the public sector, we're going to choose NHS as a case study. And said the NHS was established in 1948, long ago, after deliberation on how best to provide healthcare. Because before 1948, healthcare was paid for. There was nothing like national insurance contribution and free treatment. So things were quite tough. So the NHS came into being in 1948. And their main source of funding are from taxes, national insurance, user fees like health surcharge for foreigners, car park charges are all sources of funding. The NHS is accountable because the money is coming from the government. They are accountable to the electorate and then service users. Right. And they have to account it through auditing, financial reporting, legislation, policies and procedures. They have to make sure there is value for money. Customers and taxpayers will be able to get value from the healthcare they are receiving. A quick walk through. They are also required by law to report their source of income, financial and non-financial performance. They are supposed to publish their report. And external agencies will come in and make sure they produce their report. They make sure they give the best service to us. The CQC is another, as an example, the Care Quality Commission. They will be on the NHS. The external bodies make sure that they provide the services that they are meant to provide. The Audit Commission will go and audit them. And then the audit report will have to go through the House of Parliament. That is why all those reports are in the public domain, the NHS. Right. And we said, having done that, we should be able to analyze the different organizations in the public sector, assess the accountability of the public sector, and then analyze financial information reported for different public sector organizations. So those who missed the first lecture, here's a quick run through. It's on Moodle. I'm going to upload today's lecture also on Moodle. And next week when we meet, we'll be doing the rare thing. We'll get a financial statement from the NHS, maybe from 2 foundation trusts, and then together we'll analyze. And if you have any question, please ask me before I go away. If there's any question, ask me. The assignment brief is also uploaded, it's there already. So have a look at the assignment brief before we start lecture 3. But as far as the first part of the learning outcome is concerned, LO1 is fully covered in the first lecture on public sector. The type of it, different between the public and the private. Everything is listed nicely. And there are a few references that you can also look at on Moodle. So if you have any question on that, you can email me and we'll see how we take it from there. And as I said, I'm assuring you, there's not going to be any calculations at all. They're all going to be theories. And then we'll have a financial statement. Then we'll sit down together and then analyze. That is all that the tax requires of you. If you have any question, ask me before we go away. Okay, can I know who are there? Is Joseph there?
Yes, I'm present, yes.
Who else? Who else is on? Just mention your name.
Eve.
Eve, okay. Who else? I can see we are 4 in all, including myself, so 3 more, 1 more person. Anybody? Anybody? Okay. Joseph, do you have to ask me any question at all?
Not at the moment, no.
No, at the moment. Take your time, digest it. It's a quick one. And then if you have any question, drop in an email, and then put down all notes and questions that you need to ask. The next lecture, the first 10 minutes, we can use to answer a few questions. Then we take it from there. So, Eve, meeting you for the first time. Thank you for coming on, and I'll meet all of you next Friday. Thank you very much. And bye for now.
Thank you. Thank you.
Bye.
Bye.
Bye-bye.